So, uh, we're all set to go. All right. So, welcome everybody. And this kicks off the week of Pro Trader webinars here at Bookmap. Today we have Moby. He trades stock indexes and stock futures. And he's been trading quite a while with Bookmap since 2015. We've had him on streaming in the mornings. He's from Western Australia, so he is an expert in the extended hours or trading hours, as well as just an expert trader and deep into the tech as well. So I'll let Moby go through the introduction, but it is great to have you back, Moby.
Great, thank you, Bruce. And welcome, everybody. Let me just click onto my bio, and then we'll do the disclaimer. So, as Bruce said, I have been using Bookmap basically since the trial came out, 2014, 2015, and I took up the lifetime license offer then, and I've been using it ever since. And it's a testament, I'd say, both to the software and also to Bruce, that I still use it. It's one of the very few things that I still use from 2015, and I still watch Bruce's morning sessions when I get a chance, because I'm always looking at how to best use Bookmap and seeing if I've strayed off the beaten path. I think I've tried every single add-on, so I've had a fair bit of experience with using everything in Bookmap. So, yep, there's my bio, in case anybody wants to read it. So, in terms of everything in my trading style, it's really the Wyckoff style, David Weiss, Adam Grimes. It overlaps with supply and demand, but basically how I describe it is the big guys are in charge, and they need some level of fuel, which is fuel from trapped versions of themselves or retail traders to go from point A to point B, and point A can be below or above, and point B can be above or below. So they just need fuel to drive their cars through the market prices from high to low and low to high. Let's move on to the disclaimer. This is just an educational webinar. So all Bookmap materials, information, presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent trading performance. Okay, I'll leave the rest of the slide up for a couple of seconds so you can read that, but the disclaimer is available from the Bookmap website at any time, and it's also on the front of every other presentation that we do. Okay, right. So it's basically a quick synopsis of the parts of the webinar I'm going to do that cover extended trading hours. I'm going to describe what it is, what has changed in the last couple of years, because I haven't given a YouTube presentation for a little while, so I'm just going to do a very quick overview on that. And then we're going to talk about what still works. So I'm going to go through some slides of some live images I took at this time yesterday in NASDAQ. And then we are going to move off to a live set of Bookmap heat maps on ES and MNQ, which is the micro version of NASDAQ. I use that instead of the NASDAQ because the heat map is a little bit clearer and has more information than the NASDAQ one. But essentially I trade them both, but I use the MNQ heat map. Okay, so in a nutshell, what is ETH? It's essentially three different sessions. I'm excluding the New York Open, which is 1700 hours Chicago time or 1800 hours New York time for the first 2 hours. That's mainly just a carryover from the close of session in real-time hours. And what I'm talking about for extended trading hours are three sessions. We have the Asian session from the Japanese Open all the way through to the German Open, which is currently in your summertime at 2 a.m. And then that carries through until we have enough US traders, US banks trading roughly around about 5, 6, 7, 8 a.m. in the morning, and then we have the pre-market session through till the 9:30 open. So I kind of count it as three entirely different sessions in the sense that they have their own character. And I am these days much more interested in the last one, the pre-market overlay, than I am in the first two. And I will explain why, because if we just go down to my next paragraph, and we'll get on to the more interesting stuff, the pictures in a second. But what has happened is that there has been a massive increase in short-term options trading in the last couple of years, and especially this year. And that has resulted in the action that we're seeing in the London session, in the Japanese session, not typically being true auctions. So that a lot of what we will see there are just table tennis or tennis between very, very large algos at extremes of the market. We can still trade it, especially if there is decent relative volume that day, but we just have to be aware that the nature of the auctions in the extended sessions have changed, and that because there is so much money in the SPX options as well as the individual stock options, more and more activity is now focused on the RTH, and that is why the activity there is of greater interest basically to all traders, including myself. So I'm basically saying I've migrated quite a lot of my trading, even though I'm around during extended trading hours. I'm around. I do trade it. I traded it today and I traded it yesterday, but I'm also spending more of my time in the RTH session. And as you move into your winter time and your daylight savings ends, I will also be experimenting with the last 90 minutes of the RTH session just because of the overlap with Western Australian hours. So I'll be basically trading your close. And that's partly because of the nature of the options behavior in that last 90 minutes. Okay, quickly. So as I was saying, the SPX options trading in dollar terms now equates to about 6 times the dollar value of ES futures for every single day. So if the money is all in the options, you have to know what is going on in those options to be able to trade ES. We can still do our scalps, we can still do our small swings, but without the options information, we're trading a little bit blind. Okay, and what still works? As I mentioned in my intro, I'm still looking at fuel-based trades, and we're going to have a look at 2 of those particular setups. And I'm sticking for this presentation with 2 simple setups because they keep coming up multiple times a day, and because they're simple. And if you've been trading as long as I have, what you'll find, which I'm sure has been rammed down many people's throats already, is that complexity does not work. Complexity does not work for the simple reason that you cannot repeat it consistently day after day after day. So you may have some particular edges, but if you get too focused on them and they're complex in nature, you can miss the bigger picture and wonder why they're not working. Whereas if you stick to simpler setups, then you stay abreast of what is happening on the bigger scene, and you are more likely to be successful. And that's why I do recommend anybody here to join Bruce's pilot program and to adopt some of the checklists that they develop there and stick with them until you have your own checklist, or you have your own mental checklist of what you're looking at in each and every trade. Okay, let's move on. Okay, I'm actually, this is a slide just showing what I've got in my bookmap, but I will switch over to a live bookmap. So I will just double check that we are live. And if I double check this, yep, we are live. Okay, so if I go back to the slide, my bookmap is really, really simple. I haven't got major subpanel graphs. I'm not really using many of the widgets. I have experimented with all those widgets, and I think they are great. But these days, because I'm looking at so many different things, including a lot of stuff on options, and I will share a couple of images on the options pictures that I'm looking at as well. I like to keep what I'm looking at in Bookmap very, very simple. So this annotation just basically sums up what I've got in my Bookmap, and this is after 10 years of using it. So I'm using the rainbow heat map. I spent a long time using the monochrome or next to monochrome version of the heat map. The rainbow heat map does show liquidity better. What I tended to find was that if I focus too much on the rainbow colors being the dark reds and oranges, I sometimes missed bigger liquidity elsewhere within this zoomed in Bookmap. So if I just switch to this, and we go through here. Here we have a zoomed in rainbow heat map, and we've got the stops and icebergs. We've got this add-on, the liquidity, what's it called again? It's called the liquidity marker, and I'm just showing increases or decreases in liquidity. But the reason why I'm very comfortable just having a very bright heat map is because I can then switch it out for a much more zoomed out picture. So this is essentially a complementary heat map. This is the main Bookmap data heat map. You can see here I've got a dumbed down version of it. I've got no delta dots, no delta volume bars. But what I do have, and this is the beauty of using one of the latest services the Bookmap has released, and it's stuck with me, Bookmap Data, is that I can go back and I can backfill, whoops, I can backfill that up to 96 hours. I think Bruce can correct me if I'm wrong, but basically you can backfill 4 days, maybe an entire week. So what I tend to do is have a liquidity picture, and that's all this zoomed out version of the heat map is, and I hope by loading that data we're not going to lose what I've got here. And this is the heat map from the entire extended trading hours session for today. And why I have it like this, and this is zoomed out both vertically and horizontally, is I want to see the bigger games in terms of liquidity that they're playing. And if we switch over to the NASDAQ for a second, you can see what I'm talking about in terms of what do I mean by a game of algo tennis. So you can see here, you've got these liquidity levels, these big liquidity levels that came into play. This is before the German Open, came in again at the London Open, and you can see that they, for the first, in fact, for the entire session from Japan through till now, actually, we have just been playing a game of tennis between this level here, which is about 24,970 and 25,025. So basically a 50-point game of tennis between high-level liquidity. So when we look at the couple of setups that I was talking about, one of them is a double bottom or double top or spring or breakout failure type trade. And you can see straight off the bat here that essentially what I'm saying is that when you got to a double of this with heavy liquidity there, and we then zoom into the other heat map, we can see the setup that would have then taken us to the other side and then back again. That is very, very common in extended trading hour sessions. The only caveat I'd say to that is that there is another phenomenon which I'm sure everybody is aware of, which is this never-ending ramp that we've got based on AI and the big tech 7, the Mag 7. So at some point during the 24 hours in play, the extended trading hours or the real-time hours, we've been basically making new all-time highs every single day. And in terms of extended trading hours, when has that happened? So if you scroll back on your charts and you look back to this period, that's the London Open, which is 3 a.m. New York time and 5 a.m. If you look between those 2 hours, you will see nearly every single day that there'll be a bottoming of the market and then a V-type reversal, so basically going down and then straight back up again at some point in those 2 hours. And it helps a lot, and my colleague David, who I think is speaking later in the week, talks about this as the There's institutions like the Swiss National Bank doing that ramp, and it occurs a lot more, or it is a lot more likely if you've got something like settlement above. So if it's pushed itself down to a low, by the time the London Open comes along, at some point, those institutional algos come along in the next 2 hours and ramp it straight up through yesterday's settlement, and then quite often keep ramping it. So that is another phenomenon that has been happening in extended trading hours, and it keeps happening each and every day. Today is an exception. So we can actually see here that even though we did have a little ramp at the London Open, they actually came back 4 hours later and took out the double bottom or the triple bottom there. Right. Okay, let's just go back to go back here. Okay, so as I was saying on my high-level liquidity heat map, I have no dots and no bars, and all I'm essentially looking at, sometimes I even turn off the stops and icebergs, which is on this chart. I'm just looking to see where these big patches of liquidity are, whether they're at round numbers, whether they're not at round numbers, and they're more believable if they're not at round numbers. For example, this is yesterday. As I said, I took these images yesterday at about 7:30, 8 a.m. New York time, and you can see what happened in terms of the RTH session and that liquidity up there at 6740. I'm not quite sure I actually hit it. Let me just have a quick look. Yes, it did hit it. It did hit it, so I'll take that back. So they often paint the pictures with these liquidity levels, these heavy liquidity levels at non-round numbers that price will eventually get to. The one danger that I will stress when you do have this high-level liquidity picture is that you often get these really large liquidity levels, and price action looks as if it will go down and go and tag them, but quite often what they will do is the absolute opposite first. So if you've got price action coming down towards, not sure, sorry, not sure you can see my mouse. Let me just switch to the live screen here. So what you'll often see, and if I zoom in a bit here in ETH, is that you'll have this level here, and you'll have price action. And I won't bring up the dots here just yet, but it will look for all intents and purposes as if it's going to smash straight through that, and that's what the liquidity picture is presenting. It's presenting the double-edged sword that it wants to be filled, but it's also a rejection point. And what will often happen is that it will get filled, but that it will reverse 100, 150 points in NASDAQ and then turn around and come straight back to that level. So it's just one of those things that you get told to honor your stops, and that is a very, very good reason why. We might have a fantastic target, but if we don't have our setups and we don't have our risk protection of our capital, then our accounts are going to get destroyed if we focus too much on something that could well happen, but may happen several hours down the track. Okay, let's just go back to the slides. Okay, there are two setups that I'm going to start looking for when we move over to the live heat map again, and I zoom into my short-term time frame charts. One of them is Bruce's TLBA, which is a Trendline Break and Accumulation. Correct me if I've got the acronym wrong. But essentially here, the way I've drawn this, and this is the one that did happen yesterday, this is NASDAQ, and it happened at 8 a.m. or just about 8 a.m. yesterday. So you've got a clean channel, and if you bring up a 1-minute chart of NASDAQ or 1-minute chart of ES, you're going to get those really, really clean channels that you can then see perfectly clearly in Bookmap as well. It's just for reassurance that you're seeing the same channel in both places. I just like that assurance, and I've also coded an awful lot of things in my charting platform to do with risk and seeing things in certain ways, and that's why I double up by having a charting platform with map as well. But you see this clean channel that they that they go up to, and you can see the liquidity that is taken out. There's a clean break, which is, in this case, a sweep. You can see the vertical price moving down from the liquidity at this 24,750 level. And that is the first trade setup. So it's a clean breakdown and then a retest of towards the high or towards that liquidity, and then a clean break lower down, and it takes out the previous swing low. So when I'm looking for a trend line break accumulation trade, I'm looking for that liquidity target that they're moving the channel up or the trend line up towards or down towards. I'm looking for a clean break. I have learnt to my chagrin that it's best not to anticipate or predict that, around about here, that they will break that trend line, because quite often trend lines can continue a lot further than you can possibly imagine, and NASDAQ can have uptrends that keep going forever. So you wait for a break. Sometimes you'll have a beautiful retest, sometimes it will just be a horizontal chop, and then it will move down quite violently quite often. So what I'm looking at is the trend line break, or the clean trend line, the channel, the liquidity, and a delta column, which is this column on the right-hand side, where I'm looking to see a trap. I've got the volume bars on the chart as well because I do pay attention to what goes onto Bruce's heat map. I also look at our students' heat maps in the academy, and some of them do use the volume bars extremely well. I can't say I have ever been a great proponent of the volume bars, and I keep them as short as I can so they don't interfere with the heat map. But what I do love is this volume profile column, and let me just switch to the live heat map so I can show you what I mean by that. So if I look at the delta column, all this is a chart volume profile, and all we're doing is ticking that box delta. So if I untick it, you get a normal volume profile with buys and sells all added up, and if you tick it, you get ask volume minus bid volume. And that's what I prefer to see there because it works with the two setups that I'm looking for here. So if we're now looking at this live, let me just see if we can draw this on as well. Let's draw a line too. Sorry, that line is not the best. Come on, line. Let's just see if we can make that one a little bit bigger. Okay, so, all right. I did set it to be 3, but I think I've got to hover over it so you can see it. But essentially, this is a live chart of NASDAQ, and we've got something very, very similar to the image that I just showed you from yesterday. So you've got a ramp up to a liquidity level that was placed before the move started. You can see that there, and you can also see there's another liquidity level just above it. It's not as a round number. The reason why I pay less attention to round numbers is because there's always liquidity, or nearly always liquidity, at round numbers. So quite often they can be disregarded. That does not mean always, it just means sometimes they can be disregarded. We have a nice clean channel shown by the line. You've got 2 touches of it, and then we hit the liquidity, and then we break it clearly. As I was saying, we don't always get a test back up. If we get a retest and a fail into this trapped delta or potentially trapped absorbed buyers, that is wonderful. But on this occasion, we didn't, and we started to move down. So that is a live example of that trend line break accumulation trade, and that is one that I would have taken. But I don't talk and trade at the same time, so let's ignore that one, and let's go back to the other type of setup that we can cover and come back to. Okay, so that's the trend line. What I also, before I move on to the next slide, what I want to point out here is with the liquidity above, because we're moving on from this setup to the next setup, I want you to note that the liquidity stayed in place. Even though it's a semi-round number of 50, it stayed in place. So if we go into the next slide, well, one of the things that I'm doing where I am looking for a potential trade back to this through the second setup, which is a double. And by double, um, I mean a trade. Just switch across so I can draw. It's a little bit difficult where you can't draw on a screen. So let's have a look. Now, we haven't really got any great examples of a double, but this is actually a good example of an imperfect double, and imperfect doubles are just as good as perfect ones. So when I'm talking about a double here, and hopefully the cursor is coming across, I'm talking about if this is a swing low, I'm looking at three different zones for what I constitute a double. So this I'd call a near test of that swing low. Then if it was a little bit lower down to about this level, the 987 level, that would be a perfect test. And if it went down a little bit further and took that out, that would be, and then reversed, that would be a spring or a breakout failure. So I classify my double type setup, the one that occurs so often, as one of those three categories. And I've looked into the statistics of, what is more common, what's the higher probability? And the answer is it's not possible to predict. So we do not know, and we can't know, and it's not our job to predict, but we cannot predict when price comes back to this low, whether we're going to go all the way down, just stop, just shy and reverse, or go through it. So all we can do is use what we've got, including our Bookmap assets, to see if it is worth taking a double-based trade at that point. Okay, let's just go back to the slide. Okay, so here, within the rectangle that I've drawn at the bottom of the screen, you can see these doubles a little bit better. So the one that stopped just before the rectangle, you could call that a near test, and there was a small retracement or rejection. Then there was one that was almost a perfect double bottom, and then a final test, which is a spring because it goes down a little bit further, a breakout failure beneath, and then reverses and then goes up. What is beautiful about this example, in fact, why I like this one so much, and I was really pleased when this occurred at exactly this time yesterday, was that the delta here on the right-hand side in the delta column is so large in terms of the potential of absorbed sellers and trapped sellers. And we've also got a couple of liquidity zones in yellow here that it hits through, and they passively absorb those sellers. And you can see them all added up here. I've got, as one of the tools that I use, a visual time and sales in Sierra, so I can see the largest trades that would have occurred as part of this, and that gives me some information, some data, some assurance, I suppose I'd call it, in terms of, of the probability of this reversing. In other words, I'm saying that if I get a very large trade at around about this level, then I know there's likely to be a reaction. And that's one of the reasons why I also keep a time and sales there. But for this particular reversal, the good thing to note here is that the liquidity above stayed in place, that we had a huge trap at the bottom, we had what constituted a double, and we had a clear target. And in terms of the risk, you have to form your own view on how big or how wide a stop you want to take on a trade like this. I like to keep my stops small so that I have less issues about flattening a trade. So, I hear a lot of stuff, and I've seen an awful lot of webinars, YouTube's videos that all talk about 2-to-1, 3-to-1, 5-to-1 ratios. I don't really believe in any of that. I believe that risk is dynamic, that risk you can only really measure properly once you've got a trigger and that you monitor that risk live. But here, we would have had a clear trigger in terms of the trap. We know that if it gets down beneath these big trades and keeps going in terms of this area, then it can keep going at least the height of this one downwards. So I would have had a stop probably before this level here at 24,760. But we had a very, very clear target up above. And if we keep clicking onto the next picture, you can see what happened there. So that liquidity increased and eventually it took it out. In fact, I haven't got that one. But anyway, it did actually take it out. And I think we all know now in hindsight that there was, let me get rid of this and we go back to the live images. What we know in hindsight now was that there was a very, very big deal between OpenAI and NVIDIA, and both markets, ES and NQ, made all-time highs. And it is quite likely, or we can assume it's quite likely, that some of the larger players in the market were aware or had some inclination of that information. And that's why we had such a big move up in the RTH session. But we as retail traders can't really know that. We can only trade what we see on the charts, including in Bookmap. Okay, I'm just going to go through some images now before we go on to onto the live heat map and look at trading for about 20 minutes for the last 20 minutes of the webinar. I promised that I promised Bruce that I would delve a little bit further into what it is that I'm looking at by way of options and how it goes with futures. So one thing if I just quickly go back to the live Bookmap, one thing you'll notice in my Bookmap is that I've got a column. In fact, I've got get the cursor on the right screen. I've got 3 columns, 1 column, 2 columns, and 3 columns. And if I just zoom out a bit, you can see what's on those columns. So you've got a column here, it's NDX, or if we go across to ES, which is probably more relevant because it's the SPX options. You've got a column here called SPX, and you've got a column called GX and a column called SG. I took up the Spot Gamma annual special offer a while ago because I thought it was a great learning resource. So I'm lucky enough to have the Spot Gamma subscription for the year. So what I've got in these 3 columns, I've got a live SPX price. So this is basically translating via a service called GexBot what the live ratio of SPX to ES futures is at any time, and I update it every single minute. It's automated. It's just a little study I built in Sierra that just takes this information and plots it inside these lovely columns in Bookmap. So, I mean, these are just Cloud Notes columns that you can do anything with, and I encourage people, if you haven't played around with these Cloud Note columns, you can do an awful lot. I've seen a lot of people use them in different ways, but it's a very, very easy resource to use with very, very little coding ability required. And if I was going to digress as to why I do so much coding these days, one of the reasons that is something that has changed in the last 12 months. The ability to create quick studies, and I'm going to turn my attention to studies in Bookmap in the next couple of months or so. The ability to quickly produce studies, indicators, pieces of code has changed dramatically in the last 12 months. When I was writing a complex study inside Sierra chart about 12 months ago, it would probably take me a day, a couple of days in terms of writing it, fixing it, testing it, etc., to deploy before I felt it was even worth keeping on a chart. These days, with the concept of vibe coding, which I'm sure many of you know, all you basically need is a modicum of coding understanding, and I've got a modicum in a few different languages like C++, Python, and PineScript. All you need is a modicum so that you can decipher code yourself, and then you can use vibe coding, which is AI-based coding and things like the open source VS Code, and you can crunch out many, many iterations of studies rapidly. So even in the last 3 months, I think I've across 3 platforms, I've probably created about 80 or 90 studies, and some of those studies have had 14, 15, 16 different iterations of them. And it's just something that is open to all of us as traders to get into or to maximize what you can see or what you want to see on a chart. So what I wanted to see, turning back on this chart, is I wanted to see the live options prices, and I wanted to see the live GEXPOT levels, and a couple of these acronyms like zero gamma, which I'm sure plenty of you do know about, and the spot gamma levels like the level ones, which is one of their largest ones. And if I went back to if I went back to NASDAQ, you've got the triple Q call wall just over here at 25,125, which is in NDX terms 24,880. So I wanted to know where all these options levels were as we developed liquidity or we developed price action inside Bookmap, vis-a-vis the two types of setups that I was talking about. So if I now digress as well and just show you a couple more images from that slideshow. So this is a heat map in another option platform. I've tested quite a few. You'll always find me, no matter my age, and I'm not the youngest of the Bookmap coaches, you'll always find me testing out different platforms for information on things that I feel have a direct effect on the price of symbols or instruments that I trade. So this is, I won't mention the name of this platform, but this is another platform that displays customer information and also market maker position information. So the people on the other side of these huge options deals in SPX. In other words, whenever a retail person buys a call option in SPX, there's a market maker or a dealer that sells that call option. So this is a heat map for the next few expiries, 1, 2, 3, 4, about 7 expiries of where those market makers are holding or net positive or net negative positions in SPX. And I just find that it's one of those things that act in the same way that our liquidity levels in Bookmap act as potential magnets. Do I take all those trades in futures? No, I don't. Some of those trades, because of the way that futures, especially NQ, operates, is it's wild and wacky, and it's far safer taking a smaller position in an option spread than it is in a futures contract. So I will be looking at the information I get in Bookmap, but I may not necessarily take a trade in the futures there. Okay, let me see. Trying to get the next picture up. Here we go. Okay, right. This is a 15-minute chart. It can be any platform. This is just showing, again, those options levels as bars. One thing that I might code inside Bookmap, I've actually been encouraged by the options developer GEXPOT to do this, is to replicate some of these bars inside a Bookmap heat map, and I may get around to doing that very soon in Python. But it's just because these are live bars during the RTH session, you can see how the net gamma, positive or negative gamma exposure changes during the session. So if you could get that onto a heat map, that would also be quite interesting. So that's one of the other things that I do look at live in terms of options and how it relates to the ES futures prices. And also, just one other chart. This is just FYI, just watching how the gamma exposure levels on a chart and how the premium in the options is drifting or increasing or decreasing during the day. I think that's the end of my digression on options. So let's go back to live Bookmap. Okay. So now I've just really wanted to explain what it was that is there. So essentially, we've got 3 options columns, and I'm looking at the action that we're seeing, especially on the higher time frame. I've got that not next to that. Let me just drag. Let me drag the tabs so that they're next to each other, so that as and when I'm looking at the largest level here is that level 1, 6,700 options level. And you can see they're not perfect because we're an ETH, so my 6,700 is not going to match that perfectly. But perfect has never been necessary when trading. anybody that strives for perfection does not tend to do well. But looking at this, I mean, we can see from our higher level liquidity, and we ignore all the options for the time being, what's happened in ETH. So that this liquidity, or these two big bands of liquidity in ES, got placed around just about half an hour into the London session. Price moved away, so they acted as an initial rejection. But then when price eventually turned around, we went straight through and they introduced further liquidity down and down. So if we once again try with this line, I'm hoping it will appear a little bit better than previously. Again, it's really, really, I apologize for it being so narrow, the line, but you can see that is a trend line break trade. So if we were doing this one, or if you were doing this one, I'm going to go to some live trades about what may happen, or trades are likely to happen in the next half hour in a second. But if we were trading this, and you've had this rejection off the large liquidity levels in ES, and ES, you don't get as many trades in the extended trading hours session, but you do get some, and this one is a beauty. You've got this lovely trend line channel, and it's respecting it for from about the London M3 o'clock right through till, does that say 6 o'clock? 3 hours, a 3-hour trend channel, and we have 2.5 hours worth of resting liquidity in place. We get a clean break of that channel, and where does price go? It goes straight through to the liquidity and then onto 2 further bits of liquidity until it rejects and returns back to where it came from. Okay, let's zoom in and look live about what may be happening today. Okay. And we are once again, it's just, I just have to refresh my mind of whether we have taken out yesterday's high or not. So excuse me for a second while I just have a quick look. Yes, we have taken out yesterday's high in NASDAQ and did not quite take out yesterday's high in ES. So I was just prefacing the fact that we are still very, very near all-time highs which were made yesterday. So we're in this never-ending bullish position. One of the things that did come out yesterday was that there were some breadth signals, which were sell signals. So that's something I bear in mind. Then I would go and look at the options positioning to see, and if we just go back to that image slideshow for a second. So if we just go back to this and we go back to the positioning, I would look at, this is today's SPX positioning. I'm just looking at where the magnets might be above and below. And where they're too far away, you have to sort of ignore them unless we're going to have a massive day and you really need some kind of news impetus to get us on a range that far from where we are at the moment, which is roughly 6,700 in SPX terms. So we're roughly around about this level. So these magnets are closer than this magnet here. So that's all I would really be looking at in terms of the positioning before I then approach the heat map. Okay, then we zoom into, what I tend to do is have this as a 20-minute or 30-minute chart. So you've got two contradictory bits of information there as we look into what may happen today. We have a sell signal, which is something that is likely to occur. If I was actually going to go through the higher level positioning of the gamma exposure, and we looked at what was likely to happen over the next few weeks, and by the next few weeks I'm talking between now and the end of October, it's likely that at some point we'll get a pullback towards the 6,500 SPX level. But that cannot influence what we are going to be looking at today. We can only trade what is presented to us. So what we can do for the next 15 minutes is look at what is in the market by way of liquidity and what is setting up right now to trade. So we've got some seriously large liquidity levels. You can see it's basically the same large algo that has moved from there, which is 6747 ES down to 6745. And they're probably the same algos that drew or have been drawing market activity towards them over the course of the session. So what we then are looking for is one of our trade setups. And I did mention that NASDAQ, you're in the extended trading sessions hours, you're likely to get many, many more setups than you are in ES. But one thing that we can guesstimate or we can anticipate and then prepare for in case the trade does occur is if we do our little line again and we start drawing our, again, I apologize for how dull and thin that line looks, and I will change my settings. So we've got a trend line. We'll get rid of the information from earlier so that the delta, because it's chart visible delta, you don't want the irrelevant information. What you really want is the delta that has occurred since the previous swing low, and I'm calling that this level here, 6748, the previous swing low. So we're looking at this delta. So there's some accumulation here, but there's not an awful lot of liquidity in terms of a large liquidity on this heat map. There's nothing really until we get to 6755, 6756. So all I'd be doing at this point, and you remember we can't get, no, I can't redo anything with that line, so I'll leave it alone. We can't force trades to happen. All we can do is anticipate where they may happen and be ready to take them if they do happen. So all of this prep work means it's a question of observation and patience. So some of the trades that we get, like some of the trades in NASDAQ, you may, if you do trade NASDAQ, you may suddenly find that you get one or two trades that last literally 30 seconds and go straight to your target. But some of those trades may have taken 3 to 6 hours to set up before the trade occurs, and then bang, and the trade is over and you're on to the next trade. So it is a real combination of patience and then no hesitation once you actually get your setup for it to occur. And let's just zoom out as well here. So that was one potential, which was the, let's draw the line again. So at some point, a trend line break of the uptrend line, then down to the liquidity levels there, or maybe down to yesterday's low or yesterday's point of control, or VWAP. I haven't quite got VWAP on this chart, so it's hard to tell. The other potential here is that what we've got here, let's just draw some more lines. Draw a horizontal line across, and another horizontal line there. Yeah, so the other trade we've got, so you can see here that if this had set up, and we can zoom in to see if it had set up, what we've got here is a double bottom, 1, 2 bottoms, and then a spring beneath it. So we're talking about the double trade setup that I was talking about previously. This one goes down just beneath it and then reverses back. So if you Google a Wyckoff spring, if you Google the name David Weiss or Adam Grimes, and you look at the definition of what this setup is, which is a look below and then a turn around, that is a Wyckoff spring. So that is the second setup that I mentioned that we're looking for all the time. There are other ways of trading this, but again, I would strongly suggest just sticking to simple things. Just don't look for complexity. Look for context, look for information, and then just take the simple setups again and again and again, and take your losses. Any trading system that is worth having is never going to be 100%. If it's 100%, there's something seriously wrong. It's just waiting for one big trade to destroy your account. So with this kind of trade, a spring where we're targeting at least this level up here, 6754, and maybe some liquidity up at 6757, and this top, which is a 3 micro tops. There is a good number of points to be had, 45 up till 56, a 10-point trade. And if you have a win rate of, say, between 55 and 70%, and whether you do or not is entirely dependent on on luck, partly because you have to be here at this point in time to take that trade when you have that look below and the look up. And quite often, especially if you're trading ETH, you can miss these trades because sometimes they can have these moves completely out of the blue. And if you're not at your desk because you're doing whatever you're doing, and today there would have been a couple of beautiful trades when I was going for a lovely swim, but it's summertime here in Perth, so or almost summertime, and one cannot be at one's desk. But all you can do is put yourself into a position where you have simple trade setups that repeat again and again and again, and try and manage them to get the most out of them, and accept your 30-40% losses on each and every one of those setups. So that is the first one that's coming up, and then there is likely to be up above around about in this zone here. I'm not sure if I can draw a second. Let's draw another line here. Let's draw another line. In this kind of zone here, there's likely to be a double bottom that takes us down to one of these liquidity levels. We can see this liquidity level is now stabilizing here at 6740. It'll be interesting to see if after the open, because it's probably going to be more like after the open, which is only 35 minutes away, we then get a trade back down to this level, the 6740 level, which was, if we then go back to yesterday on this higher time frame, if I'll just hold on a second, I will go to my browser. It's a shame I can't. If you refer back to the beginning of this video, I'm trying to do it now. Maybe if I can do it, just bear with me just 1 second. I'm just trying to get yesterday's liquidity level. So if we zoomed back into 6742 yesterday, I think that is it. Yeah, that's there. And we just drag that across. This is something else that's worth mentioning because it keeps coming up again and again in Bookmap and in trading generally. If they've got a level, and you can see here, historically, they loved playing with this level. They kept adding 200 contracts of liquidity to 200 for 10 contracts. Let's just put it that way, because they were just advertising liquidity rather than transacting 200 contracts. They put that in place for most of the entire session yesterday. And what you'll find is that where you have a level that has that level of significance over such a period of time, it is likely to be revisited again and again, probably the next trading day. And then we next look at some of those options levels like the 6680 level, or 6680, 6685 SPX, and see if there's some confluence between that before we sort of put any eggs in the basket and thinking there's likely to be a trade back down to 6740 at some point. But what we're doing here really is just spending a few minutes gathering ideas of what may happen. As we prepare for the market, what do? We look at the calendar. And if I look at the calendar right now, I look at the calendar and I see we have world leaders at UN. It's not really much, and we're at 21:45, which is 9:45 a.m. We've got the S&P services and the S&P manufacturing. So we have some major news at 9:45 after the open. So on an occasion like this, where you do have major news within a few minutes of the market, I would tend to wait. Just to have the patience until that news has cleared, and then let the auctions that you normally get in the market take place, because the auctions during the opening sequence and a news event just after the opening sequence can be quite horrible and not necessarily tradable in a reliable and repeatable way. Okay, so I'm just saying that there is a potential at some point that if we do go up, that we may come back down to the 6745 level and the 6740 level based on the liquidity there. I won't try and get back my options heat map, because that will also change dramatically in the next half an hour. So what I would have shown you on that heat map is likely to change considerably as they buy and sell new contracts. And with the SPX, there's one thing I also forgot to mention. The SPX market itself, the options market, is open for a large part of the extended trading hours. So from about 4 a.m. onwards, when the pre-market for the stocks opens, that market becomes a lot more interesting to anybody that's observing it and taking into account any of the information that is presented there. So yeah, that is. So if you are going to start using that information, just be aware that there can be some good pre-market information well before 9:30. And going back to our trend line break, one thing I was saying earlier was that I do not like to anticipate these breaks because you can get into an awful lot of trouble. So here, we have this, it's not drawn very well at the moment, but we have a trend line going upwards, and we tested it once. We've had a near test on a second occasion. We have not had a clean break. If you're going to trade that particular setup, especially if you're going to go for a short in a market which is so bullish, a clean break is a far safer alternative. But now we're also watching as the liquidity in these levels that we marked before, those orange lines, the ones that we've just marked, the liquidity is increasing up at 6756. So we're now seeing that double test, the test of that double up there, is now more likely to occur. So that's one of the things that we do use Bookmap for a lot, which is watching how these levels increase and decrease as we are scouting for our trades. I think I'm beginning to run out of time. Let me just do a time check, 8:56, and I haven't stopped to take some questions. So let me just stop here. Let me read the chat and just see if there's any particular questions that I should be answering. Okay, right. Let me keep them. Let me just read through the questions. Okay. Get your questions in now. Okay. Okay, Zach, why use MNQ and not NQ? Okay, personal preference. If you ask Trader, that's TR8ER, or me, and we're both people that spend a lot of time in extended trading hours, you'll see that the action in terms of liquidity is a lot better in MNQ than it is in NQ in terms of heat maps. In terms of the actual size of the volume traded, it doesn't really matter these days. And why I say that is because all these markets are so correlated, and NQ and MNQ is essentially the same market. It does not matter whether the volume happens in NQ or MNQ. If you're a person that loves to see big block trades, well, if there's a big block trade in NQ, there's going to be a big block trade in MNQ as well at roughly the same price. It may not be the exact same price. But if there's an unfinished auction, not that I use those as much as I did, it's likely to be in both of those markets at roughly the same price. Let's keep going down the questions. Gexpot is working on a Bookmap add-on as well. That's great. I did ask Jasper recently, but I wasn't aware of it. Jasper's a great programmer, so he doesn't need me to do that for him. I will wait with bated breath to see that released, because I think it would be a great add-on to Bookmap, and he prices his stuff very well. So if you pay one price, you get access to the add-ons across several platforms. So it's likely to be Bookmap as well as Sierra and ATAS, etc. Stephen, I noticed in ETH is slower, but sometimes you get some decent moves. Yes, you do. Yeah, there's another caveat I forgot to mention, which is if you have a major news-related event in ETH and you get real relative volume, and I track relative volume, and because markets change as much as they do these days, my relative volume calculations are against the last 10 trading sessions. They used to be against the last 20, but these days things change so much so quickly. I am watching that relative volume change on a minute-by-minute basis. I've got a small graph on one of my monitors. At the moment, it is 76%. If we're in ETH and my relative volume and it is really low, so under 65%, and it is flatlining at 65 or going down, I'm not expecting great moves. But if there's some great news, whatever it is, whether it's a tweet or a new tariff thing or a new piece of China threat on tariffs against Nvidia, etc., then that relative volume will spike up, and you might have some amazing trades for the next hour or so, or maybe for even longer. That is a totally different ballgame. That is not the market that we've been looking at for the last hour. Yeah, all the things that you're learning in RTH in terms of order flow trades. Wow, yeah, I've just seen the picture that Jasper's posted for Gexbook, so thank you. Yeah, so all those skills that you're learning from using a heat map and order flow in RTH would apply equally during those news-driven events. Elections are a perfect example. Okay, Zach again. The middle depth column with the pink and green numbers, with the what add-on is that part of? Pink and green numbers, that was Spot Gamma. Spot Gamma actually do a cloud notes, which is in the subscription, and you can paste that straight into Bookmap. I don't like the colors. In fact, I couldn't even read the colors. Maybe I'm going colorblind in my old age. So I basically, I've written some code that effectively reverses those colors or does custom colors for me. But that's that. The column that says GX are just the major GEXBot levels, and they will change live every minute during the RTH session. Okay, let's scroll down. Stops. Stephen, I don't know if I'm going to have much time to really talk about stops. All I would talk about really is the notion of taking your stops. If you're going to trade ETH especially, or it applies equally if you're going to trade RTH, you have to respect your stops. Even if you're not taking them smack bang at the price that they're at, if you're monitoring the dollars that you are in deficit, you've got to watch that like an absolute hawk. Because even if you have a setup or context or whatever it is that gives you tremendous confidence, there's a poker adage, which is that even the best possible setups are likely to fail 1 in 5 times. The best possible setup. So you can believe everything about your setup, but 1 in 5 times, maybe slightly less for you, maybe slightly more. Who knows what luck is with you? It's going to blow up in your face, and it's not worth taking that risk. So one of the studies that I coded in Sierra, I've got lots of risk studies. I think 3 or 4 of my studies are all about risk. So I'm always watching that risk in relation to the dollars from the trade, and also in relation to the account size, etc. So all I would say with stops is you can never really predict the future. So if you have an idea of your setup and you've got a checklist on where it is wrong, then you honor that. Even if you're willing to give it a tiny bit of room for whatever reason, don't give it too much room. Otherwise, you are causing yourself a deficit, and the only thing that can really damage you as a futures trader is if you let yourself dig yourself too deep a hole that you can't get out of. You will be amazed how many times you can get out of small to medium-sized holes, because the opportunities that present yourselves, even if you're only sticking to 2 types of setups like the 2 that I presented, they occur multiple times a session. So if your holes are small, you will get out of them, or you should be able to get out of them, provided you trade your plan. If you don't trade your plan and you take massive stops, that is not trading your plan, and you're unlikely to get out of them unless you start gambling heavily and you start doing things like martingaling, in which case it's really a casino and not a trading session. Okay, any other questions? Oh, yep. ES and NQ. Yeah. They're different. They are different beasts. We can flick between them now. We flick between the trader map light versions there. You really need to zoom vertically to really see it. But Only when I zoom vertically do you get the idea of the chaos or madness of NQ. The way I had it zoomed out previously, you didn't realize what a mad beast it is, but it is mad. So you've got to be prepared that um, it's crazy, and you have to want to trade crazy before you go with it. If you're going to become an expert at SPX options, I probably wouldn't bother with NQ futures. I'd probably just stick to ES because there's still enough range for you to trade both ES futures, SPY, the stock, individual stock names, and SPX options or XSP or SPY options. Okay. The middle column. No, the middle column is not the middle column, Zach, that says depth is just a standard bookmap column. So if we just configure the column, I think that's the one you're referring to. That's just the normal DOM depth, the bid and ask numbers. I've had a time in my trading career where I was more of a DOM trader and I watched more what was hitting the DOM, in terms of the numbers and all of that. But these days I don't. I just don't do that. So yeah, I mean the numbers are great for me because when I'm looking at NQ and I'm looking at liquidity levels, and if you go back to my YouTubes, you'll hear me say this previously. If you've got this resting liquidity or potentially resting liquidity up here at 25,027 and 25,030, I want to know if this is bright red, what is the actual amount of orders there? So if that says 62, and I think it does, and that one says 52, we can double check by zooming right in, because sometimes they change when you do zoom in. That's still 62 there. If it's well above 30, then I'm interested in what it is as a resting liquidity level. Whereas if that was like 10 or 11, I'd immediately say that I don't care that it's red, it's irrelevant. A question from, can't really read your name. Let me just expand this so I can read your name. Oh, okay, your name is R. Right, sorry. I was expecting it to expand to Russ or Rob or something. Oh, hi, is there a way of inserting a volume profile on the charts? Yeah, there is. I mean, if you've got that, if you've got the delta column that we were looking at, and you configure it, and you just get rid of delta, that's a volume profile. And that could be a chart range volume profile or an entire session volume profile. If you choose the session volume profile, you can choose the start and stop times. So yes, there is a way. I do have an entire day's volume profile on my Sierra, but I've migrated a lot away from actually paying a huge amount of attention to volume profile. I used to, but I don't really pay as much attention as I did. For the two types of setup that we discussed in this presentation, the TLBA and the doubles, you can see those. You can see what the profile would say just from the price action. In other words, the price action is a good substitute for having a profile. You don't need it. You can see it in your own head. Richard, oh, sorry, Richard. Yeah, sorry, I can address you by your name. Yeah. I am probably not the best person to ask. DOM Pro, the DOM Pro add-on may well have VAL and VAH. Even in my Uh, I, I can't show you because I can't actually drag it in at the moment. I'm not projecting a monitor as such. I'm projecting windows of applications. I don't have the value area high and value area low visible to me. What I am more interested in is if we look at, let's have a look at this. If you watch where my cursor is, that to me is like a distribution. So if that wasn't the delta but the volume profile, I'd be interested in that as a distribution or a range. But by the same token, I can look across and I can see that price is in a range. So that if we were drawing a rectangle, Okay, that in terms of a volume profile would be a nice normal distribution. And I'm saying, yeah, no, great, but it doesn't really add that much to me in terms of what I'm looking for from this setup. For example, if I was doing this micro range trading from top to bottom or bottom to top or both, it doesn't add anything for me. Whereas the delta does, because it shows me the potential absorption of sellers at the bottom or buyers at the top. And my visual time in sales, if I look at this one, this is delta 153. And I'd be intrigued to know what that was from my visual time and sales. I'd have to scroll back and look inside Sierra to see what that was. But that would intrigue me because that was a collision with liquidity that resulted in a reaction. So I'm curious to know what size of trade occurred there. That's more interesting to me than a normal distribution volume profile of a range. I hope that answers that question. All right, I think I've probably gone over. I hope it was interesting to people. That you can see that I still use Bookmap. I still use it very actively, and I'm always happy to answer questions that people have. And I also believe that Bruce is recording this, so it will be available. I'm not sure whether it's going to be available on Discord or in YouTube, but it will be available. I think I should wrap it up because I've kept you for nearly 75 minutes, and you need to prepare for the open if you are trading RTH.
Excellent data or information, Moby. It's always a pleasure. You always have really interesting things and deep insights to the extended trading hours. Uh, yeah, more of this would be fantastic. Anyway, um, I think, yeah, we've gone through all the questions. Yeah, just thank you very much, Moby. And I don't know if there's anything you want to wrap up with.
No, no. I mean, yeah, as Bruce says, I am around in extended trading hours, but as I say as well, that I I have to adapt as every trader who does this has to adapt, and if that means that we have to trade more the morning session or the close of the afternoon session, we do it. In other words, all I'm saying is, extended trading hours are great, but if the trades aren't there, don't take them. Just don't take them. Just adapt your hours to sessions or to times when trades are present. And that would be my message to anybody that trades for a long time in ETH.
Yeah, perfect. Thank you very much, Moby, and thank you for like all of the coaching, like the um, uh, anyone involved in the Bookmap Academy knows how good the feedback is that Moby is presenting and providing for you if you're lucky enough to be covered in that. So, put your, content into your spreadsheets and Moby might be able to cover it one time or another. But it's been excellent work, Moby, really.
Thank you.
Okay, well, yeah, we'll wrap it up. Thanks again, Moby, and we'll do it another time soon.
Okay. Cheers, everybody. Bye.